Well, good news if you're a homeowner. Inflation for the March quarter has gone up less than expected, 0.6% for the quarter, making it a yearly rate of 2.9%. I'm joined by Adam Creighton, Chief Economics Correspondent for The Australian. Adam, that's good news in terms of rates, isn't it?
Yeah, well, it certainly is good news if you're a mortgage holder. It means that the possibility of a rate rise has fallen. Some economists were saying that the RBA might increase rates towards the end of this year, but that's now very unlikely given that the rate of inflation has increased, but by nowhere near as much as was expected.
So how come it didn't rise as much as people had thought?
Well, basically, in the lead up to Christmas, we saw a shock jump in the rate of inflation, but that wasn't replicated in the 3 months to March. So basically, people were expecting the same would happen again. In fact, it's actually even less, this 0.6% rise that you mentioned, because part of it is underpinned by an increase in the cost of cigarettes, and that is because of a scheduled increase in tobacco excise in that period.
And one of the important parts of that, of course, is what it means for the dollar, because the idea that the Reserve Bank might start moving towards a neutral bias or heading towards pushing up rates a bit closer than many had thought was pushing the dollar up. What will that mean for the Australian dollar?
Yeah, well, certainly today we saw the Australian dollar fall more than half a US cent. It's down now, currently trading around 93 cents. The Australian dollar has increased about 3 or 4 cents over the past month, and that was partly based around speculation that interest rates might increase. And so because that expectation's fallen away now, we did see that fall in the dollar. I mean, as always, no one really knows where the Australian dollar is going to go. It's certainly still at a fairly elevated level. The RBA has stopped talking about it publicly. In fact, if anything, the RBA is probably content with where it is, because a high dollar is going to keep a lid on inflation because it brings down the price of imported goods.
Now, speaking of imported goods and the impact that might have on the budget, what are we likely to see in terms of the budget, and how will inflation affect the way that the government thinks about that?
Well, I would say on balance, the government's probably happy with today's figures. A slightly lower dollar is going to boost the budget bottom line, and currently, of course, Treasury officials are putting the budget together. Treasury has a habit of picking the current value of the dollar to base all of its revenue forecasts on, and so they'd be hoping for a lower dollar value in the lead up to the budget so they can have a greater revenue and obviously bring the budget back to surplus sooner.
Adam Creighton, thank you very much.
Thanks, Jackson.